Good afternoon. Welcome to the show, Options Brew TV. I am your host, Lex. I'm kind of Serape Lex today. And with us today is a great gentleman, Fausto Pugliese. I hope I said that right. We're going to find out in a second. But man, he's got some great experience in the industry. We're going to talk to him today. So stay tuned. Fausto, welcome, man. How you doing?
I'm stuck in a hotel room to come here to make the show, being at an event right here. But other than that,
yeah. So that's because you're the man and you travel all over the place with your business, always presenting, right?
Always trying to, educate the world.
I love it. All right, let's get to business. So here's the deal. Give us your background. I have it here on the paper. I'm not going to read this. I'm going to let you do it. Give us the highlights. You have quite the career. You've been in this deal for 30 plus years, right? Like kind of like me. Guess what that means? You get to be a kind of an old guy too, right?
You call me. I tell people I'm your great grandfather. I mean, other than now, I'm starting to get gray a little bit. But other than that, yeah. I mean, like when I started, there was like 1,000 of us. Now there's almost millions of people doing it all over the world.
I love it.
Yeah.
All right. Well, give us the highlights of your career. I mean, it was back in the 90s you started, right?
Yeah. So how I got started is I was one of these living in New York. My parents came to this world, this country. I was actually, first generation Italian, and they're like, listen, this is the opportunity, the country of opportunity. Go out there, try to find out how to make a lot of money to do this. So obviously being in New York, I mean, what do we know about New York? Financial district. So I had a lot of friends of mine in school that were doing really well, driving nice cars. I'm like, okay, how do you get into business? So I got into the worst part of the business, which is being a stockbroker. That's like the only way to get in the door. Sometimes you got to start working small, and hated it. But I learned something very valuable. I learned that people make the most money is in the trading department. Every time I want to buy stock, I had to go to the trader. Every time I sell, I go to a trader. I always had to wait for them to say, hey, did I get filled yet? And they're like, yeah. So I'm like, that was the job I wanted to do. So I quit being a broker and I try to go trade on my own, which is one of the dumbest things that people can do because they try to go out there and, say, hey, let me try it and see how things work. And I kind of blew up an account. My dad gave me money. He says, listen, that's it. You want to learn, you need to surround yourself with people that are really good at it. Okay. You want to be a bad trader, hang around people that are really bad at it. So went out there, finally got a job as a trader. Didn't want to do that because back then, that you got to get licensed, you got to work for somebody, you got to split the profits. But that splitting half is better than nothing. And let me tell you, I tell this, Lex, to everyone. What I learned the first day on the job, I should have never, ever made my first trade. And the same thing we're going to talk about later in this presentation and show you. It's all about following orders. Like, I didn't know you could follow the institutions. I didn't know you could follow these big, what we call iceberg orders of these big block orders. I was always focusing on the past. And then I realized, crap, I didn't know you could see the future. And the future is, where's everybody have their orders? Where's everybody have their limit orders? Because what's in the past is not always indicative of the future. So to make a long story short, I became a very good trader. I didn't want to get into the brokerage business and started doing what other people doing. So I said, you know what? My mentors told me, says, Fausto, you're a great person. We know you very well. You know your family. Listen, if you want to be successful at this, you got to surround yourself with good traders. You got to teach them. You got to educate them. So I started one of the first schools in the industry. Okay. There's probably a couple of us that just started out back in the early 95 times. And basically I started Cyber University, and, the only way I could do is I had to educate people. So I was like one of the pioneers to start a webinar technology and just basically run these professional trading room and so on. And I trained like hundreds of thousands of people over my lifetime, teaching them all over the world. A lot of them became students, started their own schools, started their own rooms, but like basically just love teaching and giving back to the people to kind of make them realize how to trade. So I've been doing it ever since. I mean, but nothing has changed, Lex. It's been really the same thing. Only thing got better from where we started until today, and this, we didn't have to deal fractions anymore. Right? Ticket charges got cheaper. The technology got better, and here I am, working, remotely. So
right, that's awesome. Yeah, what a story. So did you ever go down to a trading floor, or did you always do it off floor in an off floor environment? Like, because
Yeah.
I'm from the option side, as you know, and I think you're for more to the equity side. We had trading floors, and they kicked our butts down there and said, "Hey, kid, knock yourself out, have fun."
Yeah, well, I was never fortunate to be a market maker on the floor of the New York Stock Exchange, but there was another section. I don't know if you remember back then, but like NASDAQ and New York were always competing with each other.
Sure.
NASDAQ was kind of new back then,
Yep.
so those were market makers, and I was on the trading desk side, not on the floor side. And obviously the floor doesn't even exist anymore. I mean, it's going to be you're going to have bar mitzvahs and weddings there soon. You know what I mean? That all started when Hurricane Sandy started, but they realized, electronic is the way to go. It's
Sure.
easier and so on. You don't got to be on the floor anymore. So that's really how I kind of started and my career working from there.
Great. So then now you built Cyber Trading University, huge education site, right? Is that safe to say? Okay. Yeah. And then do you have other teachers in the organization? Are they doing their own thing as well underneath you, or as a part of your organization? How does that all work?
So listen, I can't do it all myself. I mean, so I have my staff that also I have other instructors that work for me because we do a lot of coaching.
Mm-hmm.
We do a lot of one-on-one. Like, you got to understand something. I know a lot of people want to learn how to trade, and you should go out there and learn from other people because you'll find out why one person's better than the other or what kind of style you like. We all should agree you can't do this yourself. You wouldn't want anybody to do brain surgery on your loved ones that was self-educated. So the way it works is that, I have other instructors that work with me. We're in our trading room.
Yep.
Listen, I can't be in my trading room right now because right now I'm in the conference, but my instructors, my other traders are in the trading room with my hundreds of traders in there, working with them. Most traders are not there full time. You don't want to be there full time.
Mm-hmm.
Some people trade in the morning, some people trade in the afternoon, some people trade once a week, and so on. So constantly rotating, but we're always there during the market hours.
Okay. So you're always there in the market. So how would you describe to a newer person, let's say, who doesn't necessarily know much about trading yet, whether it's, whether it's stock or options, in your case, the stock, how would you describe to them your method or your style? And I know you mentioned in the papers that more of a day trader versus swing versus that. What does that all mean? And which would you say your style is?
Well, that's a great question. And I think people have a very bad bias against day traders because what happened back in 2000, the internet bubble. So, what it meant was a lot of people were not really technically day trading. They were more swing trading. They were investing, doing other stuff. So day trading basically means you're in and out the same day.
Okay.
We don't care what we trade. We just trade volatility. We see what's moving in the market. We just jump on the bandwagon. We make our money. We call it a day. So you like to sleep better at night. You hold positions. Anything happens, whatever. Then there's swing trading. That means we hold a position more than overnight, but you're doing it to design, like we do swing trading also, but sometimes it takes a couple of days for a stock to come to fruition to say, I like the stock, maybe I'll do it as a swing trade. And then there's obviously investing. And then obviously, then there's a leverage way of doing it. And, maybe I'll do an options trade, but you really got to understand how a stock trades. And that's really a big issue. Like, you can't do shortcuts in this, Lex. A lot of people try to do shortcuts. You can't think like, oh, let me just open up a brokerage account and start trading. You really need somebody. I mean, like, one of the things that are not exciting to me to teach, but I have to do it. Some people, Lex, they don't even know what a bid and offer is. They don't even understand. Like, I had a student the other day, not like a while ago, I'll never forget. And he was a professional athlete. And all he was asking me, and I felt bad, but and I'm not trying to bash anybody, and I want to bring it up or any type of, sport.
Sure.
But he just didn't understand where'd the money go.
Right.
That's all he was asking me. So when I buy it, where's my money go? And then how do I get out of it? And how do I get that money? I mean, and some people just don't get it. And I really sometimes have to go back to kindergarten and teach them. Like, I remember when I first started teaching people, my biggest nightmare was teaching fractions. You have a pizza pie and you say, okay, if you take out a slice, you got 7/8. What is the spread? And so people and then when things are moving, it's like quarter, eighth, 5 1/4 to 6 16ths. You know what I mean?
Right. That's
so
funny. So it's funny you bring the fractions up because I started in the era of fractions on the floor, and we were all pretty good juggling numbers, right? Which is
Right.
kind of
You got to
fun.
be good with numbers.
Yeah, and the fractions were interesting because most people really couldn't add and subtract fractions very well. It just wasn't
Right.
natural. So we
Right.
all got really good at it, and when we got really great at it, they changed it to decimals on
I
us.
know.
And I'm like, oh, I had such an edge down here with fractions, and now it's decimals. I'm like, God, I can't believe that happened. Well, then the story, right? From decimals, we went to computers, and then we went to hybrid trading, and then we went to full
Yeah.
off floor trading. And all of a sudden, as we talked about pre-show, these trading floors that used to have all of us down on it, they are like museums now. And
Yeah.
you go down there and look at, the
Oh,
dinosaurs.
especially yours. I went down to your
Oh,
exchange. I mean, and people don't realize, but New York Stock Exchange is not that big.
yeah,
It's really small. I mean, it looks
right.
big on TV, but when you go to when I went to the CBOE, I mean, I think it's massive.
It's
So it's
big.
like a football field. There's like sections everywhere, and the
Yeah.
whole place is empty. It's just like this one little corner. I think last time I was there.
Yeah. So what they did too is they moved it. So they sold that building and they moved over to a new building that they kind of rebuilt for just the SPX and for
Right.
VIX and maybe another few products. So I don't know.
Yeah.
I'd go back in a heartbeat though. You know that old story, Fausto. Woulda, shoulda,
Oh,
coulda. I'd love to go back.
yeah. Well, that was all the mudslinging days and
I
stuff
know.
like that. That was fun. But like getting back to your question, that people understand about
Yep.
decimals and fractions. Actually, that's what we made most of our money. It was all like eighths and quarters. I mean,
Sure.
and then you didn't realize it, but like back when we used to trade, like we had to guarantee 1,000 shares. Now you can do one share, and like people like making eighths and quarters all day long, and a quarter was $250.
Sure.
So it was just adding up, eighths and quarters, and like a spread, like you have to envision this that like a spread that you think is a penny in today, a spread back then was an eighth. That was 12 cents. So
Yeah.
one tick was $120.
Yep.
Today you make one tick and it's only like $1.
Yeah.
So it was a big difference.
Yep. Absolutely. Yeah. That is absolutely true. But it did,
That's why traders make so much money. That's why I love that.
That's right. It did democratize, the industry. It really did. It made it better for the retail trader, I think. We were on the professional side of the world. It was difficult to compete after all this happened, right? So
Yeah,
I've moved to the retail side of the world from the prop side. I have a huge background in the prop side, but I got to tell you, the retail side's better. It really is, and I always credit guys like you, and your firm and all the folks that work with you for sort of revolutionizing our industry and really making retail a great place to be. It's easy, it's cheap, right? It's not expensive to trade anymore. You can, if you have a computer and you have knowledge, okay, and I'm a big fan of mentors and tutors and teachers, whatever the right word is. I'm a massive fan of that. And I think you're doing some great stuff relative to that. I think it's super, super important for people to get a fundamental and even beyond knowledge of these markets. So, you know what the big deal is. You're going to say it, I know. Man, the failure rate has got to be huge in trading. And can you imagine doing this on your own?
It's because it's such so easy access to do it.
Yeah.
So like, getting back to what you mentioned earlier, that like NASDAQ, like if you go to our site, I mean, right on my homepage, I'm a regular guest at the NASDAQ teaching you NASDAQ wants me to teach everyone just basically how to trade on levels on their NASDAQ book viewer,
Right.
And you got to remember, it's like, why would, they realize that if you understood how to trade the market, it would totally give you a different perspective of understanding, like, oh, now I get it. Now I can see all these buyers. Now I know why my order's here. Now I know my order's there. I mean, I was actually one of the developers that brought what we call these ECNs that you might, some people are like, what's an ECN?
Mm-hmm.
It's an electronic communication network. It allows you to become a market maker. So I was actually one of those beta testers that actually built those, and getting back to history, it's funny, I don't know how much time you have. I could talk about it, but like I also write in my book. But like when I was one of the SOS bandits, you ever read any of the stories?
Oh, yeah.
Yeah. So I was
Sure.
one of they call those AK SOS bandits. NASDAQ had a major problem with market makers because market makers basically monopolized the whole market. Like in other words, if they didn't go to work, they shut down. If they were not answer the phone, after the 87 crash, that's how SOS came out. But then what happened is they found out ways around like how to work orders. So they're like, okay, how can we make the market more fair? And they came to people like me and he says, Fausto, what can we do? And he says, you know what? Let me become a market maker. Let me go out there so I could compete against Goldman, Merrill, Shearson. And I'm like, okay, that sounds pretty great. Let's try it. And it really kind of, like you said, it changed the whole market around, because now a lot of people realize you can actually put those orders out there and compete with them.
Right.
And let me tell you, nothing has really changed till today, Lex. It's the same exact thing from what I was doing 25, 30 years ago till today.
Yeah, that's great. Do you want to run through a couple examples? And
yeah, like we could bring up one right now.
Okay.
Listen, I'm going to bring up something very generic. Okay.
Sure.
Here's basically Apple. Now, this is basically live data.
Okay.
And you can see right here, like everybody here likes to, if you're listening and you kind of look at trading, you might look at this, kind of makes a little sense, but most people look at the past. Okay. I don't teach the past. I teach the future. And the future is, why is Apple going up? And your goal is, when are you going to take a profit? I mean, that's the ultimate goal. Like some of us, if I get out now, do I hold on to it? Is it going to break this resistance? Well, if you notice, like right here, there are two very important columns that we have.
Okay.
And over there on the right-hand side, there's a bunch of numbers. Okay.
Yep.
It's called this, this COB or something like that?
Yep.
Those are every order that's out there around the entire world of people looking to trade Apple. So, and then what happens on the left of that, on the heat map part of it, you can see that you have these little red lines. Basically, the more shares that are trading at that specific price, the darker the line. The less shares are trading at a specific price, the darker the line. You get the blue line. So you get more red with more volume. You get a lot more blacks and blues with less volume. Okay. So if you'll notice, like, you'll see how the stock is hitting, like it's going up, it's backing off, it's hitting up, it's going back. Like right now, the stock's got this major support level right at 142. And it hit there, it backed off, and it's hitting again because there's a 23,000 share seller out there. Oh. Now, this is more just on a day trading part of it. If I shrink that list, I could see if there are buyers at 150, 145. Like, so you can implement this into a swing trade, and you'll just see the future of limit orders. And basically this leads to having a game plan. Hardest thing to teach though is like the greed, Lex, like people like, okay, I see it's there. Do I take it? Do I hold on? Yeah. That just comes with experience.
Sure. So you don't necessarily have a hard and fast signal that says, if this happens, then get in. It's more of understanding this flow and then making an informed decision. That's
all it is. It's just basically just following the money. That's really it. I mean, like, indicators, us as day traders, we don't use indicators because they're laggers. Okay. By the time they kick in, it's usually too late. It works good for swing trading, investing, options, but when you're day trading, which by the way, this still works for that too. You can do this on options. You could do it on cryptocurrency. You could do it on futures. There's futures on it. But for me as a day trader, I specifically, trade just stocks. Okay. And but you could just get a sense of direction. Why a stockbroker resistance level? Who's out there? How many shares were out there? Was that person filled? How long he was out there? If the stock breaks a support level, or know you're coming to a support level, is it really a support level? Is it really not? Is it a little? Is it a lot? And that's what kind of gives you that momentum of volatility.
Okay. Let me ask a couple questions about this layout here. So along the right side, the stock price numbers on the y-axis there's greens and red, blazers or something like that. So the longer that is to the out, the bigger the order or size of the orders that are sitting out there is. Is that correct?
Correct.
Okay. And the bigger that is, the more interesting that becomes relative to an entry and or an exit point.
Correct.
Okay. Now what happens if, I don't know if you probably can't see my mouse. I wish they had a drawing tool on this thing. So over here at 142.002365, it's kind of the top of that line. There's a kind of a red little blaze out to the right. Now, if we bust through that big blaze, so someone takes all that order flow out, is that good, bad? Do we want to follow that, jump on that, and go? It's going to fly. There's nothing behind it.
That's great. That's a great question. So two things that could happen.
Yeah.
First of all, you have to understand that that's not one person.
Yeah.
That's an aggregate order of everyone around the world that might have and has a number in their head at 142.
Okay.
So for everybody out there, I always get people to say, how do I know that's real? I'm like, want to know it's real? Why don't you go out there and buy 25,000 shares of Apple and you'll see how real it is. So they are real orders, number one. First of all, you know and I know, the exchange won't let you put fake orders out there anyway.
Right.
And if anyone is listening and anyone ever tells you that, do yourself a favor, run far away, because that person has absolutely no clue what he's talking about.
Yeah.
They're all real orders, okay?
Yeah. So there's people got in trouble for that, Fausto, back in the day. People were, I can't remember what it's called, spoofing or something like that.
Spoofing. Yeah, it's illegal.
Yeah, and it became illegal, and all of a sudden that got the SEC, slap on the hand, which was probably more like a belt. Yeah, so that doesn't happen anymore. That's illegal.
Yeah, that doesn't happen. But people, you know what's so funny? But even till today, Lex, I still got people ask me, they go, "What about spoofing this?" I'm like, spoofing. You think I'm going to go out there and play games with you to make a couple of $1,000s to get risky to find millions? So they're all real. But let me just tell you, there's two things going to happen. People could cancel. You could cancel an order. You could change your mind. So that person at 142, maybe that's one person at 20,000 shares. He could cancel. He could change his mind. Okay. So then what that leads to is those balls. Right? Those balls are basically time and sales.
Okay.
So obviously, if the ball gets bigger, that means there was a lot of volume. And if it's more green or more red, green means that the transactions were going off and that person was getting executed.
Okay.
You get more reds. Obviously, that means sellers getting executed, and which we all know, green means demand, red means supply. Green goes up, red goes down.
Got it.
And but if you don't see, that volume kicking in, that means that person probably cancel his order. Mm-hmm. So and that just comes with just experience and just seeing a little bit order. But the goal that everyone has to realize, and I kid around with this, but I'm kind of serious. We're just the ants on the floor just trying to make a day's pay. You guys are moving blocks of shares, and so just don't question it.
Yeah, no, that's good. So, when you teach your students, right, and there's let's just call it an entry point and an exit point, just for argument. Is that entry? I know you said it's a little bit more the feel, okay, and you can get people in. What's the exit strategy? How do you know when to get out? What do you teach relative to that? Is it something else on the screen that tips you off and says something just happened, I need to get out now? Okay, so
there are three things that we teach here at Cybertrade University. It's called tradable, trend, and trap. Okay. So the first T is very important because that's about 50% of the real failure rate. It's all about risk to reward. What does it cost me to get into that trade? Does it have a good spread? Does it have good volatility? Remember, you don't need to spend a lot of money to make money. And then obviously what the trend is and the trap is, in other words, are they where are those orders? Are they refreshing? Are they updating their quotes? There's a whole little, not a science to it, but it's more of a strategy and a technique. But the big thing that we kind of teach everyone how to get used to trading is, like I mentioned earlier, we won't teach people how to make money. We teach them how to stop losing it. Winners take care of themselves. So losers. And the way you learn is losing is a good thing. I tell everybody because if you know why you lost, you're not going to do it again. You have to expect you're going to lose.
Sure.
And you're supposed to learn from that. So we kind of break everyone to, we don't do thing on a dollar way we calculate our success. We do thing on a point system.
Okay.
So if your goal, if your goal is to make $1 a day and 1,000 shares, you do that. If you know how to make that consistent, it's a $250,000 salary. Right.
Sure.
So the goal is just trying to, just make that small profit and, starting with small shares and just working your way up until you see you're very consistent. That's one of the big issues that people have a problem. They just want to get into this. They think it's Vegas. They got the weekend to make their money and they're going to blow it. This is it's not a sprint. It's a marathon.
Yeah. So, and then would you say that most of your students, are they doing this as a living or as a complement to a living? Would you say, what do you think it is?
Okay. So I would probably say more of a compliment. When it comes to trading, listen, there are people that do make news as a living. Okay.
Yep, sure.
But when you're like me and like you, like we're here, you got to enjoy life.
Sure.
You can't think you're going to miss more than you're going to actually, hit.
Yep.
So it's, so most people are more complimenting. Maybe they're retiring. They're getting, they know Social Security's not paying enough, so they want to supplement their money. Listen, I know, and I think everybody here in this is listening. your IRA or your whatever Social Security is not going to, you can't live off that. You got to build on it.
Mm-hmm.
You know, you got to build on growth. People are living longer, and you can blow through that money in a year if you really want to. So the goal is, you know, you don't look at it like you hit lotto, like, oh, look, I get to retire. I retired $500,000. That money can go like that. So the whole idea is just kind of just as a supplement and building on it and, you know, living within your means.
Yeah.
Kind of.
Yeah. I think all great words of wisdom, by the way. So I think that's great stuff. Would you, and again, you might not be able to say, and I totally understand. Is there an account size that just is a good size account for this to all be useful and manageable? So here's what I'm getting at. I'm so against the you know, having $50 in your account and playing, you know, DraftKings on with your account. I'm more interested in people who want to do this and learn it, and you need to have a little bit of backing to yourself in order to truly, you know, I think, learn it, because then it's not a game all of a sudden. It becomes something meaningful. Does that question make sense?
Yes, it does, and that's one of the ways how we kind of filter or, you know, evaluate our students and let them know what they can and can't do. You know, so you don't really need a lot of money to do this, but you have to. Some people have these big accounts. You don't really need a lot of money to do this, but you also want to underfund yourself. You know what I mean?
Sure.
I mean, obviously, some people. The issue I have with certain people that want to trade in this business is, especially here in the States, you know, we have the day trading rule. You know, $25,000 day trading rule. But you could also just trade your cash. You know what I mean?
Sure.
Like, I mean, you know, that was a stupid rule they put back in 2000. I know that they're contemplating about getting rid of it. But I know people still dealing with it. But you could just trade your cash. But some of the stocks I trade, you know, I like to stick with like $5 stocks, $10 stocks, 50. You got to remember, if you trade a stock that's 50 and you make 50 cents on 1,000 shares, it's about $500, $100,000 salary. If it's a $5 stock that moves 50 cents, or it's a $50 stock that moves 50 cents, it's the same 50 cents.
Yeah.
You know, people don't realize that. But the people are like, oh, I never heard of this stock. Who cares? Right. You know, the stock's got good volatility. It's up, you know, 50, 80, maybe 200% on the day.
Sure.
You're not an owner of the company. You're not caring about P ratios and this and that. I mean, we have stocks that have great, it's short, like, oh, short squeeze. Oh, that scares. You kidding me? I love short squeezes. You know, as long as I'm not on that side, I'm like, yeah, they're getting squeezed. I'm with you. I'm there with you.
I'm with you.
You're done.
Yeah. So no, those are great points. I remember we were specialists in the option side, and, you know, we probably had around the globe, you know, 500 different names, right, in stocks. And people would say, Lex, what do you think about the fundamentals of that stock? I looked at it, I said, you know what? I don't even know what business that company's in. I have no idea. It doesn't even matter to me. I look at volume and, you know, this, and we have our own edge model. I don't even know what they do. How's that sound?
You know, it's funny you said that. I was on a panel at one of these expos, and it was 4 of us, and they had this really smart, you know, not a compliance guy, analyst, right?
Yeah.
I couldn't even understand what he had vocabulary. Honestly, was even past mine. I couldn't even understand what he was saying. But here you had a trader and an analyst. So I brought up a stock, and he starts blabbering away. Oh, I know this company, bad this, bad blah 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 that. Nicholas. He goes, well, I wouldn't buy. He goes, well, I would. He goes, actually, you know what? I'll buy it right now, right in front of you. So he goes, so he's like, well, I wouldn't do that trade. I'm like, well, guess what? You're right. I'm selling. I just took a profit. Now you tell me where I went right and wrong. You know, I mean, like, you know, and if I said, listen, you know, as we're traders, we're not analysts. Okay. Traders really, if you really knew what these companies do, and if you really had some type of, like, you know, if you, whatever, it could be politics or, you know, whatever it may be, you'll never make money in this business. I mean, us as traders, like, we make most of our money do, like, a new president coming in, different ideologies. If it's the Green New Deal, if it's, you know, oil, I mean, things will, if it's guns, whatever it is. I'm like, I remember, you know, the gun manufacturers took off because everybody was spending money. Oh, I don't like guns. Why? I mean, I don't care. It's not nothing me. I'm there to trade the damn stock. Right. You know, I mean, you got to look at, like, electric cars. Oh, electric cars are going up. Yeah. You know, I mean, pot got legalized. You know, Tilray took off. Sure. You know, went from like, I'm against pot. I don't know that. I think that's totally wrong. Just go ahead. You short it. You let me know how that works out for you. You know.
That's right. That's funny. No, I'm with you. Speaking of shorting, do you ever go short in your strategy or what you teach? Is it always a buy first and then sell, or can you do the other way?
Yeah, you know what? I would say I wish I would short more than I would,
Sure.
but most people they never think of shorting,
Mm-hmm.
and they're like, "Ooh, they get very nervous about it." Shorting was very difficult, and if you remember, they changed the law. We had to short. It was the uptick rule.
Yep.
So you can only short when and they obviously took it away on a downtick, so it kind of made it a lot easier to short it.
Mm-hmm.
But I would say maybe 10% of my trades are probably on the short side. You see, we have the saying, wherever goes up comes down twice as fast.
Yep.
More people are more panicked to get out than to go long. So so shorting's a lot better and easier.
Yeah.
But it is kind of a little bit more of a difficult. No one really looks at more of shorting. They always think about long. So not as much as I like.
Yeah, no, I think that's fair. I find too that in the retail world, people just understand long a lot better. And I'm not saying there's not much to understand differently other than which direction you want it to go. But it just seems like retail folks, and this isn't a cut by any means, just really are comfortable with the long side of things. I don't know. That's what I see.
Well, and it's not even just that. Some people don't understand it. They don't understand because sometimes about the naked shorts, right?
Sure.
They obviously abolished that. Some people don't even know what's a naked short.
Mm-hmm.
Well, technically, some people don't understand that listening. It means that a brokerage firm is lending you stock that he doesn't have.
Mm-hmm.
And so, what is technically a short? So very briefly to explain to everyone, it's like you're borrowing stock from your brokerage firm and telling me, hey, listen, I'm going to give it back to you at the price I borrowed it at because I want to sell it to somebody else because I can buy it back cheaper. When I do, I'm going to give it back to you where I borrowed it at. And they try to explain to people repeat that again, whatever it is. So they don't understand the concept.
Right.
So sometimes when I teach my classes, believe it or not, I have to my phase one class, I have to get the beginner stuff because you have to understand how these things work to realize that God forbid something ever happens, you don't get caught in it. And how did you lose money? I don't know.
Mm-hmm.
Was it short squeeze? I don't know. I mean, what do you mean a company didn't get FDA approval phase 3? I don't know. What does that mean?
Yeah.
Well, it sounds pretty bad. They're like, well, why did the stock go from $50 to $2 it opened up? I mean, that doesn't make any sense.
I agree. I always like to tell people, and we had a big trading firm, right? And, we had a composite position and we always worked around deltas. I know that's not terribly important to what you guys do, but, our position was always short, and I spent the whole bull market being short, but made tons of money.
Right.
So it's like, how's that possible? That's another episode, but yeah, it's possible. Don't worry. I was afraid of the downside, like you just said, because a lot of the people we taught in the old days, we found, especially in options, that velocity is greatest to the downside. Right. Mm-hmm. You tend not to have, occasionally you do. GME was one of them. You had these bust outs that are hugely volatile upside moves, but most of the scariness and velocity is a downside move, and it chills your bones sometimes, so it's amazing some of those down moves, right?
Well, listen, people freak out about it because and not only that, they're like, and then some people think is it really worth it? The stock I'm shorting at 5, how much low could I make?
Yeah. 5
points. When they think long, they go 5. Oh, the stock was, $50 and it's sky's the limit.
That's right.
So they kind of lose that factor. But then what I was trying to tell you earlier, you're not looking to go from 5 to 0. You're probably looking to 5 to go to 7.25.
Yep.
4.25, making your 50 cents, on 1,000 shares, make you $500.
Right.
And that's, and some people think that's all you make. They're like, but listen, if you're consistent, you look at it.
That's right.
It's up at the end of the year.
Absolutely. You want good batting averages here, right?
You want good. Yeah. Listen,
good.
Mark McGwire, it's great you bring up. It's like baseball. It's like Mark McGwire, what did he do? Broke the world's record in home runs. But, what did Joe DiMaggio did? Hit the ball 56 times in a row.
Yeah.
Who would you rather have in your team? The guy hits the bat 56 times or a guy that just broke the record? Because he struck out more than anything.
Oh, yeah, no doubt. No,
I'm not hitting base hits in trading.
Yep. And that was our motto in our trading firm. It was like we were never grand slam hitters. We were single hitters, bunters, and we always got on base. Bunt, single, bunt, single.
That's it.
Occasionally you'd get one you're trying to bunt and it would be a double. Occasionally, but we didn't try to make a double out of a bunt ever. So
you don't go up to bat and think you're always trying to hit a home run. And that's what most people make their mistake. They try to go up there and they think oh, Carvana was $450. It's it's at 7 right now. It's been up about 70% from the lows. Where it is. I'm going to buy and hold on. It doesn't work that way. You know what I mean? Like it's coming to big resistance levels.
Yep.
And you just got to know where those orders are. And that's and listen, they might go higher, but like I was just trying to tell you earlier, what you showed earlier in the show, you got to follow the orders.
Yeah,
you got to see, are people still bidding it up? Are they getting squeezed?
Yeah.
Or are they covering shorts? Like Bed Bath and Beyond, big short, and people are like, why is this big rally coming from? And they're like, well, did you ever heard that the shorts are starting to cover it? It might not go bankrupt as people thought.
Yeah.
Just got to make sure you're on the right side.
Yep. That's good. Okay. Well, good. I see we're getting a little, getting to the end of the day here. So, anything you can tell the folks, how do they join? I'm putting your web on there so they can sign up through the website. Is that right?
Yeah, they can sign up on that website. Go to ctu.co is the best thing. And listen, the goal is this. What I like to do is just invite everyone to just come into trading room, and don't watch me. You don't watch my instructors. Okay, we don't tell you what to buy and sell.
Yep.
We'll give you a watch list, but look at everyone else and see how they think for themselves. Look how they go out there and share their knowledge. And listen, and believe me, these people are just like you. I mean, they're grandmas and grandpas. They're engineers. They're plumbers. They're just ordinary people every day.
Yep.
But just watch and see how they think. And, as much as you might hear the positives and negatives, you get an opportunity to see what it's like, how we kind of train them how to think for yourself, because you got to know how to think for yourself. Like everybody, one of the big issues a lot of people think, like, can't you just tell me what to buy and sell? And I said, no, because first of all, it's illegal. I can't do that. And secondly, I'm registered. And secondly, even if it was, it doesn't make you money. You need to know how to find those stocks, make your days pay. And as long as you know you're working with a reputable company, people that you could trust that you're there, then everyone's got their back. And it might not be me. And I tell everybody, listen, you get a lot of great people that come on your show. They need to test and try a little bit of everything.
Yep. No, I'm with you. Great advice. I don't know if you can speak to it real quick. Rough ballpark of what it costs to join, or, if you want, or is it, it's on the site, I'm assuming. Is it a year long course?
You know what? It's basically, I just do a $9 trial.
Oh, okay.
That's it. It's a $9 trial. And honestly, Lex, I don't need the $9. That just tells me you're a real person. I'm not going to charge you and say after 7 days, I'm going to hit you with that. I don't do that. So listen, and your money's back's guaranteed. The goal is, I need to know if you're a real person. We just don't invite anyone in the room.
Gotcha.
Listen, we get bots in there, whatever. You don't know who's coming in there. So just do a $9 trial. And like I said, Mike will give you $9 back, but you'll see the customer service. We'll call you. We talk to you.
Great.
We'll walk you through a couple of workshops. We'll train you everything we talked about for a week. At least you get a feel. Like the worst thing that could happen is you finally will understand what this is all about.
Yep.
And then you'll see why we've been around for so long. And if it is something that you want to do, then we could have that conversation later, how we could basically, go from there. But everyone here should at least just try it. Nothing could, worst thing could happen is you find out it's not for you.
Perfect. I love it. Okay, good. Well, thanks, Fausto, for coming on. This is awesome. You and I are going to be doing some things together in the near future, right? We're just kind of getting our feet wet here. So this is great. Good start. Really excited about it. I think you're going to be in Jacksonville soon as well, right?
Yeah, I'm going to be doing an on-site. I did one here today, and I'm doing another one in 3 weeks, but we're live every day.
Got it.
I'm live every week, doing a presentation every week. So, so you don't have to always come to these live events. I mean, the on-site, expensive, whatever it is, there might be a time when you want, but definitely do these online webinars and, be able to interact and talk, because it takes time. You can't learn how to trade in an hour or a week. It takes a little time. You got bad habits you have to break. But we run events all the time, and we look forward to hopefully seeing everyone there. And we're looking forward to having you come speaking at them too.
I'd love to. That. So good. All right. Well, great. Thanks for coming on, Fausto. Stick around. We'll wind up after this, and great to see you. And thanks for doing this. Appreciate it.
Thanks for having me.
All right, man.